Meanwhile, after one of the fastest rallies in its history, the South Korean stock market is now under scrutiny as a sharp correction prompts regulators here to examine the market's structure. Baek Ju-hee files this report.
On Wednesday, the KOSPI plunged to the mid-5,000s and closed at 5,663.24, down by 5.98%. The KOSDAQ also suffered heavy losses, falling 6.12% to end at 662.68. A sharp plunge in both futures and spot prices triggered level 1 circuit breakers twice on each of the KOSPI and KOSDAQ markets. These circuit breakers come when the market plunges by 8% over a 1-minute period. When this happens, the market is paused for 20 minutes. And the plunge of over 16% in the space of just 2 sessions is a massive reversal for a market that was recently reaching historic heights. President Lee Jae-myung's pledge of KOSPI 5,000 became reality just 7 months into his term. From there, the rally accelerated, surging over 80% in just 20 weeks to an all-time intraday high of 9,385.59 on June 19th. But the market reversed just as fast. In about 6 weeks, the index gave back all of those gains, plunging around 39% down back to the 5,000 level. And this unprecedented wave of volatility has brought with it frequent market halts. Since they were introduced in 1998, Korea's circuit breakers had only tripped 18 times over the next 26 years. However, they have already been activated 13 times this year alone so far, peaking with unprecedented consecutive dual market circuit breakers on both the KOSPI and KOSDAQ on Tuesday and Wednesday. During the presidential tour in Sao Paulo, Presidential Chief of Staff for Policy Kim Yong-bom addressed the root causes behind the abnormal price swings. Kim noted that while the fundamental demand for the AI revolution remains intact, market doubts over big tech's revenue sustainability and new supply shocks from Chinese memory makers, such as the listing of Changshin Memory Technologies, have amplified uncertainties. He noted that Korea's market is especially vulnerable due to its high concentration of retail investors. In response, financial authorities will review the overall market structures, including single-stock leveraged ETFs and derivative mechanics.
The primary trigger was the introduction of leveraged ETFs in late May. Capital heavily concentrated into major semiconductor stocks, namely Samsung Electronics and SK Hynix. Consequently, any drop in these key chip makers directly translated into severe volatility across the broader KOSPI market.
Meanwhile, Kim also emphasized that Korea must respond to the structural shocks by strengthening national R&D and making timely semiconductor investments, while financial regulators move to revamp market stabilization tools. Baek Ju-hee, Arirang News.